Hey guys, hope you're having a fantastic day. Your old buddy Tim back on the real estate ride and rant on my way back to the office. Just had lunch with a buddy of mine who is a mortgage loan officer. He's the guy that I point people to whenever they get to the point where they are ready to get pre-qualified, to get pre-approved, get the mortgage going. And one of the things we talked about at lunch is what people should do before they get to him. Because one of the things that I think he deals with a lot are folks who will call him on the fly, or they've been directed toward him by a realtor, and they will want to get pre-approved for a loan, but they don't have all their ducks in a row. So that's what I want to talk about today. The things that you need to do really before you even try to get pre-qualified for a loan. The first thing is check your credit. Now, you should always be aware of your credit rating, and you can do that really easily. There are websites, creditkarma.com. A number of others will let you check your credit standing. Just keep in mind, I'm not going to go into a really deep dive on how credit bureaus work. I think there are 3 bureaus. They all report on how well you pay your bills and your credit standing and all that stuff. So before you try to get pre-qualified for a mortgage, you need to know what your credit score is. You know, I think lenders love people who are in the 700 and above. Just because you're below that does not mean you're going to be turned down for a loan. It just means that you may have to do some credit repair. You may have to deal with a loan that has little different terms and that sort of thing. Again, my buddy, and I'll plug him later, can tell you about that. But go to Credit Karma or freecreditreport.com, sign up and get your credit report and take a look at what is your credit score, and is it high enough that you are not going to have any trouble qualifying for a loan. And again, you can talk to a loan officer, you can talk to credit repair folks, and they will give you the lowdown on that sort of thing. I'm not going to go into it too much here. The next thing you want to do is get everything organized. You know, when you go to apply for a loan, and chances are you've applied for a loan before, they want to see all kinds of stuff. When you're applying for a mortgage, they want to see like pay stubs. They want to see your tax returns for the last couple of years. They want to know, you know, they want to see your W-2s. They want to know what your debt ratio is, all of that. So you need to get all of that documentation together before you apply, because they're going to make you go back and get all that stuff anyway. The next thing you want to think about is how much do you qualify for? And this is an important thing here, and I've talked about this on other videos. People will go get pre-qualified for some amount, but really they can't afford that amount. You know, you can get pre-qualified for $200,000 house, but that doesn't mean you can afford the monthly payment. So the big thing you need to think about is, okay, how much house can I afford? Not how much the house is worth, but how much can you afford? How much can you comfortably make in those monthly payments? And, you know, a lender is typically going to want to see a debt-to-income ratio, you know, 28%, that sort of thing. You know, if you've got 50 to 60% of your income going out the door every month, you're probably not going to get a loan. But if you are in the 28% to 30%, you're probably going to be okay. And the other thing, again, to remember is, you know, how much are you going to be able to put down? Just talked about this in another video on private mortgage insurance. The more you can put down, the better. Because number one, you immediately have more equity in the house. Number two, you can typically get better terms on a mortgage the more you put down. And number three, if you put down less than 20%, you may be faced with private mortgage insurance. Again, that video is going to be linked at the end here. So there you go. Before you even start looking for a house, do all of that stuff. Get pre-qualified. Check your credit score. Get all your documentation together. Get all of that stuff together, and then call a lender and go ahead and get the pre-qualification process, the pre-approval process. There's one of the lenders, my friend that I was just talking about, Tom Marion at Movement Mortgage. They even do they call it a pre-underwriting, where if you bring them all of this documentation up front, they can literally have you pre-underwritten and ready to go, sometimes within 7 days. So that is an amazing thing. So there you go. Get your ducks in a row. Check your credit score. Blah, 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 blah. And don't forget, if I can do anything for you when it comes, I crack myself up. I can't help it. If I can do anything for you when it comes to buying or selling a home, or helping you get all your ducks in a row, I'm more than happy to do that. Give me a call, 256-679-0704, or you can find me on the web at timknox.com.